लिंक कर दो हो गया ये वाला Hello and good morning to our Brighter Minds Tuesday meeting. So, as we all know, every Tuesday we discuss about global issues and Indian markets, along with global macros and Indian macros. So, let's wait for a few minutes. Although we are quite late by 10 minutes, let's wait for a few minutes so that everybody can join, and we'll start the session. So let's start today's meeting. We'll first discuss about the global macros and particularly developed markets like US, Britain, and Eurozone, and then we'll discuss about the Indian markets. Also, we'll also discuss about some Asian markets also like Japan and China, and we'll then move to Indian markets and particularly Indian macros and markets particularly. So let's start. As we all know, कि US के अंदर there is a huge problem of inflation, and obviously we all know that things are market is pricing up larger hikes than earlier expected. So basically, in last meet, the softer comments has led to market anticipating the lower rate of hikes. But after the Jackson Hole event, market is quite on tenterhook and in jittery. There is expectation of 75 bips hike in September mid. Basically, we will have the Fed meet on 21st September, and on that day, it will be clear that whether it's a 50 bips hike or 75 bips hike. Although there are signals and there are comments from federal bank presidents, Fed bank, Fed bank, presidents, Fed monetary policies presidents like Bostic and all. They were saying that it's time that we should make some higher, larger hikes so that inflation can be tamed. So basically, in this week we will have many events coming on, and due to that we will uh, you know have better visibility of uh, what Fed is going to do. So basically, let's start with the chain of events that is going to impact the Fed's interest rate decisions. So basically, on 8th we will have initial jobless claims, and as the Fed chairman Powell has said that the next meet will be based on a data dependency. Whatever decision will be taken in the next meet will be on latest data. So basically, on 8th we'll have in US initial jobless claims, and then on 13th we'll have a US CPI inflation data. Although last time it has cooled down a bit from 9.1 level to 8.5% level. But how this month will go, particularly in August, what was the inflation that will be known on 13th, and post that everybody will have the fairer picture of what Fed is going to do on 21st of September. Bond markets are basically pricing in a larger hike. US bond markets has already climbed from 2.8, 2.9 June to 3.25% of June, and dollar index is also indicating towards larger hikes. Like it has, went past the previous high of 109 and went past to around 10 years high of uh, 110 level. So basically, the market, US market, currency markets and bond markets are indicating that larger hikes is on the table. And so let's see what will be that and on 21st September. So basically, on economic front, we'll have few data points in US also. And as I mentioned, the initial jobless claim will be on 8th. There is also, Fed Powell's speech on 8th September that will also have some, also give some fair clue to the market, and that what will be the, actions by the Fed. And we'll also have Fed Vice Chairman Bernard a speech on tomorrow. So that will also give some cues to that meet. So now let's go to the commodity prices of the crude price inflation, and we'll have crude inventory data on Friday. So basically, on we'll have that a fairer sense of what the energy prices is going to, in particularly in crude price levels. So now l- let's move let's move to the, European markets and European economy. So we will have, tomorrow we'll have Eurozone's GDP data, and obviously that is, its anticipation is that it will be slower. uh, as we all know that there is energy crisis in Europe, and larger uh, rates, hikes is also on the table due to the inflation factor. Energy is a big, uh, big trouble. So basically, energy prices are at very high in Germany and in Britain and most of the European parts, and that is leading to the shutdown of many plants from many industries. So we'll have Eurozone data on tomorrow, GDP data, and but after that we will have, on 8th we will have uh, interest rate decisions on uh, interest rate decisions on 8th. That will also give some fairer picture about the what Europe is going to do to tame the inflation. Although market is pricing in 75 bips hike, 50 bips hike for European Central Bank on 8th, and we'll have also, Britain's monetary policy on 15th, where market is pricing a 75 big hike. So basically, whole of the Europe is going through the energy crisis, and also contributing to the inflation, and all central banks are going to raise rates in coming weeks. So as we also saw that Britain has elected its new Prime Minister Liz Truss, and she has given some electricity bill, electricity package to reduce the electricity bill to the general public, to the tune of, 130 billion pounds. So that is on the table. And also we have seen that Germany has already given a package to, cool, contribute to the people's, to tackle the inflation, particularly energy bills, that is of 65 billion euro tune. So that is the part of the Europe. As we all know, they are bit in trouble on macro front, on energy front. And we also saw that they are going to we also saw that, J- uh, Russia has Gazprom has, shut down the gas supplies to the Europe, and that is also contributing to the larger inflation in Europe. And the Euro committee is going to meet on 9th, and they will decide on the price cap of Russian gas that is being supplied to the Euro. Russia has already objected to that move, and they said that the most of the, energy they will, route towards Asia, and in retaliation of that. And we all know that the things are not, coming down between Europe and Russia particularly. So that is all about Europe, and now we will move to China, and China, particularly Asia. Japan is going to have their GDP data to after 2 days on most probably on 8th, and China has we have already seen that China is going through the slowdown phase, and they are doing stimulus, and they are cutting rates, and we have also seen that CRR rate has been cut. So that is all about the Asian economy. All most of the economies, global economies, are not in good shape. But let's come to the India. Obviously, as an Indian, we are more keen to know about the Indian markets, and more keen to have a fairer view of what the companies is going to get into in into once they get into the earning season for the Q2, what will be the picture that will looks like. So basically, India is the brighter spot in the global economy. As we all know, India is the growth engine in this slowing economy also. Most of the countries are predicted to go into the recession, but India is very safe on that front. We have also seen some news articles that there is 0% probability of recession in India. So India is on a stronger foot. So, and we have seen that FI confidence has been coming back to the Indian economies and Indian, markets. They have pumped in nearly 50,000 crores into the Indian equities in recent days. So basically, whatever money they have put into the Asia, 75% has come to the India. That shows that India is on the strong footing. On economy side, if we say that India is going to have their monetary policy on 30th of September. So basically, inflation is cooling down. We all have seen that inflation has came down to 6.5% level in the, last month. So basically, there is no such accelerated rate hikes or front loading of rates. So that is a good thing from India perspective. There is also good monsoon, good news of monsoon carrying on in September also, and there is a good uh, fair bit of rural earning improvement. So uh, India is on the brighter spot. I mean, we'll have India inflation data on 12. That is expected to come lower. And in a few days back, India has declared its GDP data. We all have seen that 13.5% level is quite good, not that bad. So basically, India is the brightest spot in all global economy. Most of the funds are looking at growth economies where growth is fairly stable and growth is quite visible. India provides that kind of relief. We also have seen that India's GDP has moved to fifth rank, above Britain. So that is also a good thing. And India is expected to grow at 6 to 7% in real terms in coming days. So coming years. So basically, that is a growth that is expected to put India into the top three economies in the world in next 2 decades. So that is a good thing. Anybody can see the growth that India is offering to the to the world funds and all. So that is all. And from company perspective, from company point of view, we have seen that 15.3% is the great growth in the Indian economy. That is quite a strong, quite healthy. So basically, banking and financial services are on a strong footing, and we all know that banking is a lubricant of a good economy. Obviously, the strength of the banking system will help India grow further. As we all know, that balance sheet of the most of the corporates are clean, and balance sheet wise less leveraged, and so they'll get more funding from the banks. And obviously, uh, we have seen that automobile numbers that has came strong in past few weeks on 1st of September. So that was also an indication of the good pickup in the economy. We have seen the commercial vehicle data that came also very strong. That is high frequency indicator for a growing economy. So that is also a good thing. And on services front, we have seen that very strong data came on services PMI data that shows that India's strength is every day that is the strength is adding up. So basically, India offer a growth opportunity for the world, and many of the sectors is likely to get benefited from this flow of the fund to India, and particularly IT and banking. They were the laggards uh, due to continuous FII selling, and that has been tamed down to a significant level. So they are going to get the good days, get to see the good days. But there are some clouds on IT due to recession, possibility of recession in US. But that is priced in by the market at current level. So who- India, is a brighter spot, and we all know that Europe energy crisis is going to benefit India, particularly those companies who are, you know, exporting goods to the Europe are going to get benefited largely, because most of the plants and supplies are in Europe are in trouble due to energy prices. So it will help India's earning, particularly to companies that are focused to Europe. Uh, Although there are some demand, concerns, but since supply is also very less due to these energy factor, so that will be offset by that. So if we particularly see about the Indian focused companies earnings, so India is going to get into the festive season next quarter, and we'll all know that after October we'll go into the festive season, and this festive season is likely to be good, and obviously demand is likely to be good in most of the sectors. So that will also help the India's valuations and all, and make lucrative for the foreign funds and all, so that India will get benefited further in terms of market capitalization and uh, growth of the companies and all. So that is all about today's meeting. So let's meet on the next Tuesday. So have a nice day. Thank you.